I am so sorry for the delay. As you can see, and as members know, I've been having a problem with my camera and really weird stuff. So I've rebooted, trying to fix it, and no cigar. So we're going to have to make do with what we have here for now. I'll get it fixed when I get a moment. Um, a lot to go over today. We're going to be talking mainly about the technicals of the market, folks. If you're not a technician, you're going to want to stick around to the back half of this commentary when we go to the weekly charts of the major averages, including the sectors, including the bond market. If you're new to trading, you don't care about bonds, you don't care about bond yields, you must. You have to know about it. If you want to be in this business, you must know about the bond market because it dictates the direction of the stock market. So stick around. We have a lot to go over here in terms of technical analysis. Uh, I wish I had good news. I don't. I think that in all probability, we are going to move lower here. May not be tomorrow. Maybe we'll pop up higher tomorrow. Uh, it didn't. It looked good this morning, but as I predicted that it would probably fade, we got the fade, except they couldn't close it negative. So um, that means something. The Bears were not in charge today. Yes, they took it off the lows of the highs of the day, but they couldn't turn the Qs negative. They couldn't turn the SPOOs negative. So they did turn the small caps negative, at least midday. I didn't check the close yet. So a lot to go over. Let's begin with this little meme here of our granny in chief. And I love my grandmothers. God bless their souls. My great grandmothers. They were wonderful people. So I do not disparage grandmothers. I love them. Yet she's in charge of our monetary system. And this is a very, very appropriate meme. She should be playing the slots over in Atlantic City, but no, she's playing jackpot with the stock market, the bond market. The entire economy is in this woman's hands, and we are in big, big trouble. So every week, it seems that I begin a live stream off. And if you're new to this live stream, please use the link below to our top 5 favorite candlestick patterns. That's free. It's a video tutorial, 5 parts. We're going to be using a lot of technical jargon tonight. Also, click that like and the notification bell, and give us a follow if you would. So every week I come on here twice a week, and without fail, we have more shenanigans that come out about this government. Isn't that funny how they picked up that I have a computer issue? They're already advertising to me. Fauci Collins. Collins is the Fauci's old boss was Collins, bagged 58 royalty payments amid 325 million collected by the NIH, National Institutes of Health. So just more and more news is coming out. We're not going to spend much time on this, but the reason why I share this is not to be political. These are the people in charge. Management matters. If you listen to William J. O'Neill or any, who's the old guy? Peter, great trader. It's going to kill me now. He had the top fund for many decades, the Magellan Fund. Peter, God damn it, I forget his last name. It'll come to me. He lives up in Marblehead. I was by his house. Insane. Marblehead, Massachusetts. When you invest in a company, you invest in management. Management is key to anything you do in the stock market. And this is our management. These are the people that are managing this moron who's now gone. And this person who really ought to be in a retirement community. And she's running our government along with geriatrics like Republican Mitch McConnell, who's now stumbling on his words. You know about our president. You have senators that need to be wheeled into the Senate now, and it's just never ending. They're controllable. This is a controlled government. And the powers that be, the the conglomerates, the corporate institutes or entities that are controlled out of the World Economic Forum and the NGOs, they are pulling the strings on this economy. And at any point in time, they're going to fumble, whether it be accidental or intentional. This is going to get real fast. So just another reminder of what we have in Washington: corruption. And I can only play 30 seconds of this. So what I'll do is I'll go to silent, and you can read the you got to be kidding me. Come on. All right, we'll come back to this. Here we go. This is what I wanted.
So how do you feel about the government's digital currency that they're working on?
No fucking way. No way. That's what I think. I think that's checkmate. That's game over.
That is fucking checkmate.
Because if they apply that to a social credit score, if they decide somehow or another that you need some social credit score system and it's for the benefit of society, and they outline that they can, you know, track your behavior and your tweets and all your things, and you get a score. And if
already doing that, they just have.
Okay, I can't play any more than that. I don't know whether I'm going to get a copyright strike. I just got one, so I don't want to get a copyright strike. I'm going to mute this, and I'll play the rest. You know, you get the drift.
Cards home to the.
All right. So this morning, what we got, you know, I didn't say hello to people. Seymour Rivers, welcome. Please don't tell me my audio's off. It's working, hopefully. Audio's good. Thank you. Paul, welcome. Franklin. Rick Tom, slow talking janitor. I often wonder who's. Very true. Talon. Ryan Rapuccio. South Shore here. Hey, we're on the South Shore of Long Island? Or of Boston? Oh, Boston. Go Yankees. Go Yankees. And I don't even like the Yankees, to be honest with you, but I need to respect the rivalry between New York and Boston. So while I'm not a Yankees fan, I got to put it out there, okay? No worries, brother. Welcome. Thanks for being here. Yeah, Marblehead. That's a beautiful area. Great restaurant there. French restaurant. It's called like not a fancy name, like the Family Place or something like that. Really good. Cool. I know it was a sneak attack. It wasn't right of me. I apologize. All right. You bet. Thanks, man. Okay, let's get to economic data that came out today. Initial jobless claims jumped last week, led by Ohio. So jobless claims picking back up again. Today, we saw yields move up measurably. I mean, a bullish key reversal off of the lower band of support. This is what I mean, folks. You're new to technical analysis, use the link below. 5-part video tutorial of my top 5 favorite candlestick patterns. This camera is driving me mad. Let me try my settings here. Video. That helps a little bit. All right. Yeah, I guess it's better. Okay. So the 10-year yield, let me make sure you could see it, rallied off of the lower band of support today. This is a big move. Remember, the market's initial reaction to the CPI data this morning was bullish. It took off. The however is that there's a stickiness. This is the phrase that we've been using, is that there's a stickiness at the core of the CPI report. That's a problem. So ultimately, stocks pulled back. And I'm going to share with you why I think that equities did not go down further on the day in a moment. So stick around. Now, this looks like a bullish candlestick, and it is. The however is that we can draw our lines a couple of different ways. So let's not be hyperbolic. Let's not say that yields are going to go skyrocketing tomorrow. I could easily take this lower band of support and say, you know what? Let's do this. We actually broke support on Monday. And where we closed today was at a resistance level. This is being intellectually honest. So while we reversed on the day, we did close at a resistance level. So when you're using these support and resistance levels, be intellectually honest, be open-minded. Don't paint pictures of what you want them to be. Me, my positions right now, I'd prefer to see stocks decline. I have a bias short. What will cause stocks to go down? Rising yields. However, if I'm not painting a true picture of how the yields look, I'm not doing myself any service. I'm only kidding myself. I'm delusional. And I had better be worried that maybe we don't have as much upside as I believe here or follow through on the 10-year yield. And perhaps I better be a little bit more cautious and less cocky with my positions than what I may have wanted to be. So, two different ways of looking at this chart. Both could be accurate. The market will ultimately decide who is right here. What we could do is have a school of two thoughts, and both will be right. We rallied off of a support level. And what will this be? This was prior support. What will this be now? Resistance. And if we spend a couple of days consolidating sideways and then begin to move up higher, all we're doing is now leaning into a rising upper band of resistance, and we're having a managed upward move in the 10-year yield. That is going to be a problem for stocks. Why? They're expensive and earnings weren't good. I have charts to go over in a moment. So that was what happened with yields today on the 10-year. This matters a lot. Now, the CPI report came out. CPI rebounds in July. Fed's favorite inflation indicator remains sticky. Now, they have a new indicator here that they use, and that's the core services CPI ex shelter. They will do anything possible to try to put lipstick on a pig. Unfortunately, it didn't work for them. It rose. The markets didn't pay attention. Bulls ran with it. The algorithms ran with it. They jacked up stocks higher. And I've been warning members, do not go buying this market on a knee-jerk reaction to the upside, because in all probability, it's going to fade. And that's exactly what happened today. It's been happening all week. So beware. Inflation is on the rise yet again. And take a look at energy prices as well. They're moving up higher again. Oil's in fuego this week. Also today, driving long-term yields. We had a subpar tailing 30-year Treasury auction, highest yields in 12 years. So what you're seeing here are demands for higher interest rate payments on our long-dated bonds. Nobody wants to pay or be paid a level of interest that's below the rate of inflation anymore. Go figure. It took them long enough to wake up and not get robbed by the U.S. Treasury. So now we're having to cough up. At last tick what was it? We stopped at a high of 4.189 on the 30-year. Still not bad. So we're still getting away with murder here with selling treasuries below the rate of inflation. Think about it. All they're doing is parking money in treasuries and trying to keep this economy from imploding. So we talk about this frequently. And again, today we get money market funds saw a fourth straight week of inflows to a new record high of 5.53 trillion. Money market funds hit new record highs. Banks' usage of emergency Fed funds jumps. The regional banks are in trouble, major, major trouble. Why are they in trouble to begin with? Look no further than this chart here that we just went over. Aggressively rising yields and horrible risk management at these banks and little to no oversight. So the regional banks remain in trouble. Here you have money market fund assets. So money's leaving commercial banks and going into money market funds. This is a major problem. So what they can't do is that they can't borrow short term and lend long term because they're stuck with too many treasuries. So what they need to do is they need to take those treasuries and bring them back to the Federal Reserve, who pay them at par. So that's you and me bailing out the banks yet again, but through the back door. They're not going to go to Congress and say, oh, we need all this money. They're bailing them out through the back door. Except the problem is it's not working yet. This has been going on since March. Federal Reserve's balance sheet. This is as of yesterday, but it's released after the close every Thursday. And last week, we saw the first tick up since early July. So the trend is obviously clear and defined down. This hockey stick move up higher back here, that was a reaction to the regional banks. And what do we see the week prior to the spike up higher? Something very, very similar to what we're seeing this week. Watch this chart. The other chart you want to watch is this one here. If we continue higher, equity's under pressure. And what also you want to watch is something I don't have up here yet, is this. We watch it every single day. As sure as God made green little apples, we watch the yield curve. And the yield curve on the week, it was up, then it was down as of yesterday, now flat on the week. It was up today. This is the reason why you saw a negative reaction to the CPI report. Initially, knee-jerk reaction to the upside, but I was always warned, the knee-jerk reaction is generally the wrong reaction. Don't get suckered in. Wait till the final half hour of trade and then put your money to work. Why buy on the hope that the rally in a downtrend is going to hold? In all probability, it is not going to. And you don't wake up. You don't wake up to bright green futures and expect there to be an end to the current correction. You need to have a washout. You need a bloodbath in the streets. Now, could we pop up higher tomorrow? Sure. We're going to go over the weekly charts and the daily charts of the triple Qs and the S&P 500 in a couple of minutes. Stick around. So I'm not saying we can't move up higher here. There's a good chance that we do, given today's price action. The however is, I don't think it lasts. And I'll tell you another thing when we go to those charts. We must have a very strong rally tomorrow, or else this market is in very, very big trouble. We'll talk about it on the weekly charts. Now, a bit of good news. The market participants expecting a rate hike in September, unch. It's actually down slightly from yesterday, pretty much unch. We hit a high this morning of 90%. We backed off a little bit, but we're very close to the highs of the week. So if anything, even with the sticky CPI report today, market participants are still expecting no Fed move in September. Now, in terms of market sentiment, this is the bulls versus bears index. And in red here, you could see where we had spikes, and then you had a correction overlaid here in black as the S&P 500. And you can see sometimes it's a shallow correction, sometimes it's a more severe correction, but either way, you're going to get a correction. Here we are now. We fell just shy of the upper band of resistance at one point in time on the month. This is a monthly chart. We were measurably above it. Then we backed off. So the month is not over yet. For all I know, we're going to break out to new all-time highs here. Stocks will move up higher. However, it's not going to last. Be careful. Why? It's simple. Stocks are expensive, right? Even with this down week so far in the equity markets, we're pretty much unchanged after all the earnings that have been released. We're unchanged from last Sunday, by and large. We're sitting with a PE of just shy of 31 versus historical mean of 17.05. Still very, very expensive. Add to it the fact that profit margins, S&P profit margins, have fallen to the post-1990 trend. Here's the rub, though. Margins tend to overshoot on the downside during periods of margin compression. and consensus expects margins to expand back to highs of 1 to 2 years ago. So here you can see a chart of where the mean in dotted line, we have now crossed the Rubicon and we are now down below that support level. Next stop down here and beyond before we get a rebound back to the average norm. So we overshot to the upside. In all probability, we're going to overshoot to the downside. Does it happen this quarter, next quarter, following quarter? I have no idea. All right, the markets are going to tell us that. But this all needs to be factored in. Equities expensive, margins tightened, yields moving up higher. What does that do? It's a tax on corporations. It's a tax on the consumer. And it's a tax, even if you're wanting to buy utility stocks. For whatever reason, I'm getting a lot of requests for utility stock reviews, Peabody and the XLU and UTSL, I believe that's the leverage ETF. No, you can't buy these stocks now. They trade inversely of yields. So you can't buy anything that's sensitive to rising interest rates. Utilities, no bueno. You got to stay away. Also, S&P 500 companies reporting positive EPS for Q2 2023 are seeing the largest average price decline, negative 5%, since Q2 2011, negative 2.1. Earnings surprises. Here's the thing to keep in mind. Here's the rub, okay? They have already guided down quarter after quarter expectations. Forward-looking guidance is still coming in negative. I got to remind you, PE of nearly 31. All right? So forward-looking guidance, no bueno. Margins under pressure. Yields moving up higher. Yield curve steepening now. We could ignore it. They could spike the market up higher and send it to new 2023 highs. But in reality, all we're doing is whistling past the graveyard, because ultimately this is all going to come home to roost. And what you've seen so far on the week, let's bring up the weekly charts. All you've seen so far on the week is very, very strong price action on yields. This is a weekly chart. We just went over the daily chart. But what you also want to pay attention to are bond prices, which are at the precipice of breaking down. They're still holding support. They haven't broken support yet, but they're very, very close. And here's the odd part. The only thing that'll probably save the bond market is a stock market decline. Why might that be? The reason is that if equities begin to sell off in earnest, and what I mean in earnest is that you have the VIX spiking up higher, breaking out, really charging up higher, not looking back. We don't have that right now. We have a VIX that's very, very calm, very, very subdued. Sometimes it's down when the market's up. Sometimes it's not. It's very uncorrelated with the S&P 500 of late. That leads me to believe there's a lot of apathy in the market. We've covered this time immemorial. So if we see the markets begin to drop and VIX begins to break out, you're going to see money rotate into bonds. Then you want to be a buyer of this. Not until then. Right now, yields are going up, bonds going down. When the equity market begins to roll over, start looking at bonds as a long. Right now, they could be breaking down further. Let's take a pause there. Seymour Rivers, what is gold's next solid support price? Yeah, we can go over that. We're going to go over the chart in a moment. I have my trusty blank sheet of paper with my Bethpage Federal Credit Union pen, a great, great pen. It's the only place I do my banking. Gold. And it's free of charge. I pick them up every time I'm there. Support. Okay. And we'll talk about the logic of why we're not buying gold right now. I own it. Physical. I don't own electronic, and I wouldn't suggest that you do either right now. Consult your investment advisor. TF Hatter. Hey, Bob and Chad. Welcome. I just bought silver for the first time. Good. If you're initiating a position here, fine. That's perfect. I already have a position in gold. I have some silver. I'm not ready. We sold it a while ago. Now we're looking to rebuild the position. We're not ready yet. We're waiting for an equity swoon, and I'll talk about that more in a moment. Starting a position in DCA. Okay. Good luck with the trade. Are you looking at 444 for support? We'll take a look at it. I really don't have a support level in mind, to be honest with you. SPY support. All right. TZ Burton, welcome, sir. Welcome. Ryan, I heard an analyst say he expects yields and stocks to move lower together. Yeah, they will. That's what generally happens. So again, it goes back to what I was just saying, is that when you have stocks decline, money seeks a safe haven. So what's the safe haven of choice? It's always bonds. So usually it's the dollar, sometimes it's not. So it should find its way both into the dollar and into bond prices, driving down yields in anticipation of Fed rate cuts. My VIX ticker has 0 shares to borrow. The VIX sticker, the shares weird. I really don't play with those instruments. I would be very, very careful. They're very, very unreliable. Lots of time decay there. TSVT. Okay, hey, Pete. Boyle, can we get to 90 by September? Easily. We could be there by next week. So yeah, we have a call spread on it as well. Okay. Moving on. I just want to take a quick peek at how the daily chart of the TLT looks. No bueno. Let's drill it, do a deeper dive here. These are rolling over. This is a dead cat bounce, and this is what I mean. We have a new member, Wendy, and she's been asking me questions. She's new to technical analysis, and she's wondering about the value of support and resistance level. And I don't know if Wendy's watching or whomever's out there that might be new. The value of support and resistance is to identify if the trend is intact. In short, when we rally up to prior pivot points connected by this line here, do we break out or do we break down? Simple as that. And if we pull back, do we put in a higher low and then break out above? And what I mean by higher low is this. Is at the bottom? I don't think it is. And if that is the bottom, do we break out above this upper band of resistance in blue and then ultimately take out 97.37, what happens to be this prior high? So the downtrend, were this to happen on the TLT on a daily time frame anyway, would now be broken because you put in your double bottom setup and now you've broken out to a new high. So you're going to have buyers moving in, algorithms moving in, bidding the shares up higher. You're only going to see this right now, I think, if the whole equity market begins to break down in earnest. Right now, the path of least resistance remains down for the TLT. And I think what we're going to see here is more something like this. I didn't want to move that. Let's undo that. Here's what we're going to get. So here's your downtrend channel, and it's widening out. So this could really drop dramatically in a very, very short period of time. So be careful with buying bonds right now. As an options premium seller, would I sell puts here? Maybe, because I'm a contrarian. I'm going to sell weakness, but I'm going to make sure I get enough premium paid to me before I put that trade on. I'm going to make sure I go deep, deep, deep out of the money just in case I'm too early, because being early is just as right as just as wrong as being wrong. It's the same thing. So we would go deep out of the money, at least 45 days on the options, and I would play TLT that way. I would not be a buyer here. In fact, I would be looking to short TLT. Moving on to the tip market. Now, the tip market is telling you right now, and these are Treasury inflation protected securities. What they're telling you right now, and folks, again, we have 32 people watching. I really appreciate it a lot. Please hit that like and subscribe button. It helps me out with that YouTube algorithm. They shadow ban me a lot, and hopefully with enough likes, they broaden out this message I'm trying to send out there. You're not going to get this on CNBC. Let's face it, you're not going to get it. I speak the truth. I speak it like I see it. No holds barred. So what you're looking at here, the message by the market is that even though we had CPI come out today that was quote unquote sticky, quote unquote, a little bit higher than expected, the tip market is not worried about inflation. And I find it odd, to be honest with you, because the market participants, we've gone over that chart already. I showed you earlier, they're not expecting a rate hike in September. So why are tips going down when there's no expectation of a rate hike? And I find it funny that at times when you interpret what the tip market might be telling us is this: are the tips telling us they're worried about a macro slowdown in the economy? Are they worried about inflation? Were they more worried today about the BLS numbers that came out about initial jobless claims? Think about it. So the tip market is very weak. It's actually flashing a concern about deflation. It could be because this is moving down because the 10-year yield is moving up higher. That's not the 10-year yield. The 10-year yield is poised for a breakout. Now, Carter Worth of Worth Charting, he's on Twitter, he's on Fast Money. I like his work. We disagree here. He doesn't believe that we're going to break out here. I think that it's entirely possible that we do break out. Do we hold that breakout? That's a different question. I tend to think that we won't. And the reason is that if we break out to multi-year highs on the 10-year yield, in all probability, equities are going to buckle. What does that mean? We just went over it. If people sell stocks, money needs to float somewhere. It's going to float into treasuries. It's also going to get priced into the market that the Federal Reserve is going to have to cut rates to bail out the market going into a presidential year. So I think that is more the reason why the tip market is not necessarily concerned about the sticky numbers. Also, you have the US dollar. The US dollar on the week, although it pulled back last week, this time last week, I always say one trading day left to go. And this time last week, the dollar was at the highs of the week up here. But by the end of business on Friday of last week, we had pulled back and that breakout was rejected. This week, we have a breakout. The question is, do we follow through? I think we do. And I'll tell you why. Is because many times when you're using candlestick charting, and I've done this for 27 years, 30 years now, not 30 years of candlestick charting, but by and large, the vast majority of that time has been with candlestick charting. And when you gap up into the wick of a prior period, so this is a weekly chart, right? So last week, it closed out with a wick on top of, or a topping tail on top of the candlestick. Now, that's kind of bearish in a way because I told you that you had sellers above and they sold strength, right? But if you open up the next period, again, this is a weekly chart, so a new week, new candlestick. When you open up into that wick, that's a very, very bullish event. It means they gapped it up into strength and the buyers overcame, or the bulls overcame the bears. Now, we haven't taken out the highs of last week yet, so the test is always at the top. Maybe they'll try tomorrow and they'll get rejected. We don't know. It's never 100%, but it's pretty goddamn accurate by and large that if you get a setup like this, you want to be long of whatever you're trading. In this case, the US dollar. Now, what's not going to do well if you have a strong US dollar? What's not going to do well are tips, which we just talked about. Tips, weak. What else? Gold, silver, mining stocks, emerging markets. You want to avoid all that stuff. Will this continue into next week? Taking a look at the euro weekly chart, we're bouncing off the lower band of support. This could rally here. So the argument could be made that if we get a rally in the euro and maybe even a rally in the yen along with it, dollar's going down. This is not a bearish chart. We're testing the lower band of support. In fact, I'd say it's consolidating and it's threatening to rally here. So the dollar is not completely out of the woods yet. I like to set up on a weekly chart, but if euro moves up higher, it's very, very difficult for the dollar to move up higher, and it's impossible for the dollar to move up higher if the euro and yen move up higher together. And frankly, the yen looks like hell. I mean, this is an absolute basket case of a currency, and this could allow some leeway for the dollar to rally on some euro strength. So this is dollar bullish. And believe me, I want to go buying more gold. I want to go buying more silver. I want to rebuy back my position I sold of the gold mining stocks, NUGT, now 3 months ago. And thank God we did that, because look at the bloodbath we would have seen. Now, moving on to the VIX. Now, this is the Pimp Mac Daddy right now. The VIX has got to tell us a story. Now, the equity markets are down on the week. Here, the S&P 500 down fractionally, not even a quarter percentage point, but the VIX should be up, right? And this is what I was talking about earlier, that the VIX is just lethargic. It's got no passion to it. It did last week. It certainly did last week, and it does to a certain extent this week. And I'll put it to you this way. We probed all the way back down to support this week, and we held it, and buyers moved it. And they bid the VIX off the lows of the week. However, they bid it up higher and they faded it. And it's still down on the week with a down market. That's not supposed to be. There's still way too much apathy. You can go back to the chart of that bulls versus bears index I showed you earlier. Way too much apathy in this market. Way too much bullish sentiment for this market to really sell off in earnest. But all it needs is a catalyst. And that catalyst could come any day. The Dow Transports weekly chart, we have now broken support. One trading day left to go. We'll see what happens. But this is what we're looking at. A clear and defined break of weekly support. Not much is going to help salvage this. What's going on here? There we go. So the Dow Transports, which have been a leadership group, even outperforming the AI stocks, has now broken support. Dow Jones Industrial Average is up on the week, nearly 1/3%. But I don't think this is going to hold. It could. I don't think it's going to hold. Now with the Dow Transports rolling over, as go the Dow Transports, so usually goes the rest of the market. S&P 500 weekly view. Now, the question was, does it hold 444? Is that the next price target? I don't think 444 is a support level at all. I'm looking for a reason to call it support, and I'm not seeing it. I'm looking at support at around 435 right here. 435, 436. That's where I think support is. And at current, We have broken down support below support at 451. Now, tomorrow morning or tomorrow afternoon, end of business, maybe we'll be back above 450, and I'm going to be out here saying buy stocks, right? But I don't think it's going to. Maybe it will, probably won't. So one trading day left to go. A lot can happen. Momentum is waning, folks. The market is sending us a signal. We could ignore it or not. Daily view, S&P 500. Update today. Stokes may be putting in a higher low, or they could break down to new lower lows, taking the equity market down with it. We'll know tomorrow. You know, if I just bit my tongue. If we wake up tomorrow morning and we have some nasty futures, I'm talking red futures, ugly morning. Maybe the futures down a percentage point, 1.5%. I would probably cover shorts into that sell-off. And I would just sit back and I would wait to see how the markets close. Do they recover? If they do, that could be a short-term bottom. If they don't and they close near the session lows, we're probably going to get a continuation sell-off going into next week. So tomorrow, if they paint the tape bright green, that's not the bottom. They may send it up higher for a day or two, but I guarantee it's going to be on light volume, probably going to fade off the highs of the day. It's not a setup you want to commit dollars to, not for new trades. For short trades, yeah, I would lean in short if they rally this market up higher on light volume, especially into resistance levels like that 451 mark. So S&P 500, they closed it up on the day. So they tried to take it lower. The bears were unsuccessful. We can't ignore that. Let's see how we closed out the day, and it gives us a feel for how we might open up tomorrow morning. And folks, we're using 30-minute charts because we have a 30-minute chart club. We'll be going live on Saturday, private live stream. That's where we go over our top picks for the new trading week on a 30-minute time frame. All S&P 500 stocks, most and some leveraged ETFs, and we'll talk about the indexes as well because we want to know if we have a bullish index to go with a bullish setup on a chart that we like, or do we have a bearish setup on the index and we want to look to be bearish on the market. So link below, 30-minute chart club. That's a private session. It's not a public session. I do post the replay. We keep it private because I want to get through it really quick so that I respect people's time. We stay on point. We don't have any side chatter, and that I can answer questions that people have. I want to dedicate that time to asking pointed questions to the charts that we're looking at. And plus, sometimes we get spam on the live streams that are public. So that's why it's private. Link below. Take advantage. It's free. Okay. So S&P 500, how we close out today? You saw some buyers move in here. I don't think this holds. Look at the volume into the close. You know, you want to argue, Bob, hey, listen, you got to be intellectually honest here. You can't be some bear all the time. You saw some buying off the lows of the session. Why don't you drill down to a lower time frame? Let's go with a 15-minute view. And to be fair, the final 15 minutes were pretty good. So what do we want to do here? Simple. We want to go to a 15-minute view. Of the spiders, and we want to take our crayon out. We're losing momentum, yet rolling over, but we may put in a higher low for all we know. It means nothing. It's just an observation. No biases here. Now, what we did do here is that we did have a breakout today on the S&P 500. What did it do? It failed to hold the breakout, but this could quite very well be a retest of that breakout. So I have shorts on. I want the stock market to go down tomorrow. I want to profit, but it may not. I may not get my way. And if I don't pay attention to what could be, then I'm not doing myself any favor. You got to look in the mirror and say, you know what? Maybe you got this wrong. Maybe you don't. But if you got it wrong, when do you get out? I would get out of my short positions on, again, a bloodbath in the morning. Then I would take a step back and I'd say, okay, Do they rally this back? Do we get a short covering rally on a Friday ahead of a weekend? Many times you generally do. This camera is driving me crazy. I can't even move my camera to adjust for this, believe it or not. We'll try that. Okay. If I lean in here, I got to lean in this way. Okay. All right. So if we break out and we put in a new higher low above 447.48, I'm going to have to think about lightening up on shorts. All right. So we're not heavily short. We're bias short. All we're doing is selling premium. If you're wondering how our week was or how it is, it's awesome. We made a lot of money this week. So all we're doing is being neutral on the market, bias short, and we're just scalping profits, rolling up options or rolling down options, and just making profits real. And it's not like we day trade. We're not trading every tick. We're not using 1 minute charts, 5 minute charts, Fibonacci's, and all that nonsense. I don't do that stuff. Now, this chart to me is the 800-pound gorilla in the room that nobody, including Carter, although he is biased short right now, nobody is really talking about, and that is the weekly chart of the triple Qs. Now, why is this important? The top 7 components of the triple Qs have accounted for the vast majority of the gains of the triple Qs and pretty much all of the S&P 500 until a couple of weeks ago. Then energy picked up. So we have a breakdown on the Qs below weekly support. We may have support immediately below. I don't know what's wrong with this tonight. Actually, we've broken that support level. I have another one down here, though. All right. I don't want to bore everybody. There's something wrong with this charting software tonight. It won't let me bring this up. All right. So we've broken support on the Qs. We did it last week. We did a retest this week, and we are now just off the lows of the week. Folks, this is very, very bearish. This is probably the most bearish chart out there as far as I'm concerned. And when you take a look at momentum, momentum is rolling over. That is very bearish. Volume on the week, though, is fairly light. And I spoke about this a couple of weeks ago. Over the course of a couple of weeks, I said, beware. You have a double top here on ADX. Beware. Let's go to a daily chart. Now, here's that support level back here at, let's call it 374. The high of the day today, they try to get it, 374.36, and then sellers moved in. But they couldn't close it down. That's the only thing that gets me about having a bias short position. 30-minute chart. They bid it off the lows, guaranteed that final 15-minute chart. You saw buyers move in. Volume was heavy into the close. But again, we need to take a look at a 15-minute chart and say, okay, was there more buying volume or selling volume in that final 15 minutes or final half hour? There was more buying volume, which accounted for the vast majority of that volume on a 30-minute time frame. So either that's day traders covering, shorts and covering in earnest at a support level, or you have genuine buyers out there looking to pick up shares and looking to take the market up higher. We'll know tomorrow. The banks. This is not a good-looking chart, but this is a chart that makes me want to get my crayon out because I think it's a head fake. Oh, come on. Will you let me save it? Nope. It's way off. Okay, there's something wrong with the software tonight. I'm thinking that we may be consolidating here on the banks. And if we get a strong day tomorrow and the markets rally tomorrow, I'm going to be looking at the banks as a potential long. Daily chart. They're struggling here. Doesn't mean they can't gap it up higher tomorrow. Volume was light. What else we need to go over here? Technology, weak. Breaking down, very similar charts as the Qs. Semis, very, very serious breakdown here on a weekly time frame. That being said, if we do break down this week on the semis, I suspect we're going to get a rally next week in an effort to try to recapture the support level. It'll probably fail. I would short into that rally next week, not this week. Next week, you'll have a better setup. Biotechs, we're long here. Maybe we'll get a higher low. I'm not ready to go buying more here. Let's go down to a daily chart really quick. I don't think this holds. Dead cat bounce. I think we go lower. Staples, nothing to talk about. Discretionary, threatening a breakdown on the week. Emerging markets breaking down, strong dollar, weak emerging markets. Avoid, folks. Energy, very strong, could move up higher. Oil, powerful week, but we backed off the highs of the week. We're now flat. So we are at resistance. We may get a pause here. What happened today? Big reversal bar. Big reversal bar. Natural gas. We are positioned here. It got extended. It pulled back on a daily time frame. Volume was heavy today. I think that this still moves up higher. Why? Monthly chart. Monthly breakout. Gold. Gold. All right, so the question was on gold, where is there support? I think we're coming down to 1900 the ounce. Maybe 1925 will hold, but I think ultimately we're going to revisit 1900, maybe an overshoot like we did back here in June of this year. Let's go to a monthly chart. We're in a trading range. So I suspect we're going to revisit that 1900 mark, maybe 1925, but I think you're going to get an overshoot again like we saw back in June. Mining stocks, weekly chart, weak. They're going to get weaker if the dollar moves up higher. If the dollar breaks down and equities recover, mining stocks should do okay. But if the equity markets break down, I don't care if the dollar goes up or down. This is going down. They're going to go down with the rest of the equity market. I think we're good here. Let's do some chart requests. We'll call it a night. Folks, we're going to be using our friends over at TrendSpider. They sponsor the show. Link below, 35% discount code. And sometimes they give you a better deal. If you go to their website, they usually have a deal of the day. And last deal, I sent out an email, and it was so good. It was it's their software, and they have a new company that they started. I forget what it's called, but you incorporate your brokerage account. You can execute trades off of TrendSpider, and it goes right through your brokerage account. And they were doing like 60% off. It was crazy. So I sent that out. I was like, you can't pass this up. It was good, really, really good offer. So let's do some chart requests. I have some members requests I must get to first. And if we have time, we'll go to the audience and we'll take some audience requests for Wendy RBLX, Franklin AAOI. All right. RBLX. Okay. Oof. What a bloodbath. Down 18.5%. Oh my God. What did they report earnings? I wouldn't short this. That may sound counterintuitive. If we do rally here, I would short into 34.56 because I suspect that will fail. And I pointed out the last time I went over this chart, stochastics were in a downtrend, avoid. And sure enough, they broke down. Daily view. We're coming down here. 27 bucks a share. As sure as God made green little apples. That's where we're going. Does it hold? I don't know, but we'll probably bounce off of it. Stokes are very, very oversold. Volume today was up. I would be very, very careful here. I'm not sure if you could sell premium here. I'm not logged into my Waterhouse account. I had to reboot before going on the show. So I would check and see if premium is expensive, IV rank of, say, 35 or higher, and then look to sell deep out of the money premium, maybe sell some naked puts or a covered put. I shouldn't say a covered put, a put spread. Sell an out of the money put, buy a deeper out of the money put to protect that position. A covered put is when you short the stock and then sell a put. So I would avoid this. 27, did I say? It's probably going to have a 27, 26 handle on it. AAOI. I'll get this right eventually. There you go, Bob. AAOI, Bob. AAOI. Why is this not coming up? Why didn't that come up? All right, to begin with, you can't buy this stock. Does that mean it's not going up higher tomorrow? My guess is it's going up higher. Why won't I buy it? It's because it's way too extended. This is not going to end well. We're leaning up it into the third standard deviation Bollinger Band. The last time we did that, it didn't end well. We had a 50% haircut. So I would not be a buyer here. It's probably going to go up higher. You have a lot of hot money chasing this stock. I would avoid it. Let's see if we have any historical resistance above. And we do. 1598. We get up to that point. I would probably, if you could, is this thing optionable? I doubt you could short it. Probably not enough shares. Yes. I'd be looking to sell a bear put spread on a rally up and into, say, 16 bucks a share because you may get an overshoot. That is what I would do with this trade. But I always say when I sell premium that's going to expire 45 days or sooner because that's when the time decay curve kicks in. When I buy premium, when I buy options, I want to go out at least 65 days or more. That way I don't get that time decay. We'll likely go below 1900. I doubt it. It depends upon yields. It depends upon the dollar, in particular the dollar. The yields can go up, and if the dollar doesn't go up along with it, then gold could rally. The dollar is key here. If the dollar rallies, then that's going to be a big, big problem for gold. So the powers that be in the United States government have the BRIC currency that's coming after them. The last thing they want to see is gold rallying and the dollar dropping because gold is real money. They know it. The BRICS know it. And that's why they outlawed gold back in the 1930s. And that's why they backed the US dollar with gold initially and then took us off of it because we just didn't have the the fiscal discipline to stay by real money standards. AAOI is not what you posted. Not was that Franklin? Was that the chart you want me to review? Am I accurate there? All right. So I think that's about it. I don't see any other requests. It is 7:05. We're a little bit over here. Folks, if you didn't hit that like button, please like, subscribe. You know the deal. Don't forget our 35% discount code, TrendSpider, 30-minute chart club, link below. 5-part video tutorial on my top 5 favorite candlestick patterns, link below. Take advantage of it. Have an awesome trading day tomorrow. Be profitable and have a great weekend.